Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, December the 4th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with the economic data. Not a whole lot of economic data. As a matter of fact, nothing really to talk about other than a couple of Fed governors speaking. We got Williams for the FOMC and somebody else, Draghi or something like that overseas is also talking, I believe. Somebody else in Great Britain is speaking. I can't remember who it is. Anyway. So not a whole lot of data today, and tomorrow is going to be a national holiday, or at least the markets are going to be closed because of the of George Bush's burial. So anytime we have a president die on the day that they are buried is a holiday for the stock market. So that's going to be closed. They're trying to figure out what to do with all of the data releases for the earnings, what days those are going to come out, and what they might be doing with some of the economic data. So we'll have to see how that all pans out. Let's talk about the overall market. Something to talk about with crude oil. I've said it time and time again, but you're starting to see it come up in the mainstream media, I guess. Something to talk about. How crude oil going below $50 a barrel makes it very difficult for the frackers to make money. There's also some hubbub about some guys in OPEC wanting to kind of walk on OPEC and do their own thing. So a lot of these things kind of spinning around. Lower oil prices, if OPEC breaks up, is almost a sure thing. And if it goes below $50 a barrel, it's going to be very difficult for our frackers to maintain that 10 to 11 million barrels a day production. So anyway, crude oil not looking so good, looking a little toppy here with the market action today. It's only up a couple of pennies, but as you can see, just that chart setup with this doji, if it were to finish here, then it would not look too good. Obviously, if it finishes at the high of the day, that's going to look pretty strong. But as of right now, it's looking pretty weak. Let's talk about gold futures. They're moving higher today, up about $4, testing this Fibonacci 50% retracement area. That is going to, I believe, act as a major resistance here. I think the market is a little overdone to the upside. I don't really see people really coming after gold, although Bitcoin is kind of a foregone conclusion that it seems to be wanting to go in a death spiral, especially if it gets much lower than this, because there are going to be miners that just shut those machines off. So, and that literally could put us into a death spiral. One could say that then that's limited supply as well and should give buoyancy. But I think that at that point, people are walking away from that asset. All right, bonds moving higher today. Something important to talk about. Yesterday, we saw and heard, I'm sure you heard a lot about this, the yield curve inversion, all right? And what is that? What does that mean? Well, the yield curve inversion really means that the bonds have a lower interest rate than what our shorter term interest rates are, like the 10-year and things of that nature. So anytime the bonds have a lower interest rate than the nearer term, then that is inverted, because we would expect interest rates to continue to rise. And when we see this flip, that's just another signal to the Fed that they need a pause, because the market is predicting that they have overdone the increases. Okay, so that is another signal. I've been talking about all of these, that the Fed needs a pause. This is just another signal the Fed needs a pause. And a lot of people say that this is a signal for further bearishness to come in the equities. Now, I think it's really a big signal to the Fed that, hey, you know what, maybe we have overdone this. We need to take a couple of pauses here, see how everything shakes out, especially heading into a holiday season. This Fed group seems to love raising interest rates right around Christmas, which just does not make sense at all to me. But that being said, I think that the market's trying to tell them they need to take a pause. Hopefully, they are reading the tea leaves like we are. So keep that in mind as well. Bonds moving higher today, and equities are showing a bit of weakness. That's not really showing up in the VIX. As you can see, it's down on the day in the 16 handle. But with the overall markets, you can see here, the Dow Jones Industrial Average down by about 150 points. It is trying to cover this gap that we made yesterday. Remember, I made big reference to that yesterday. It happened in the NASDAQ as well. We opened up our Sunday overnight session with the news that supposedly Trump and China had come up with a trade agreement to get in this trade war. I think a little bit of that euphoria is coming out of this. I even said, even if it was true, there was going to be some euphoria to come out of this, and some of the market would try to come back and cover this gap. Also, it's a little overextended. We've gone from like oversold to overbought in a sense almost immediately. It's not really overbought, but when you think about 70% of the time and volume has been spent within the value area high and low, well, once you start getting up and above over that, it does start getting a little overextended. You can see that there is value being accepted just slightly higher than here, but for the most part, all the time and volume is down here a little bit lower. So I think the market's going to roll over, and we're going to continue to see this pinging back and forth between the value areas, and I've been talking about that for several weeks now, and that's what's really coming to fruition. The market's going to bang back and forth and kind of settle down in and around that point of control, as we can see here again with the NASDAQ. Now, the NASDAQ, off of its lows, that's true, still down decently on the day. One thing to note, it tried to cover that gap. It may have even covered that gap there. I haven't zoomed in on it, to be quite honest, but a finish here could look like a continuation pattern, but I think that we're going to roll over a little bit back towards the point of control. I don't see us really having a major rally out of this. Now, this is what I was talking about again with the E-mini S&Ps. They're down on the day, very toppy, coming down to cover this gap. That's pretty important, especially if you're bullish. But I think that this covering of the gap is really just going to bring us again back down to the point of control. Great opportunity to sell some strangles and or, if you just want to sell calls and puts. There's still some good high implied volatility out there in the markets. You can see volatility is coming out of the market despite the fact that we are getting a down move, which is not generally the case of what we would see. But I think that the overall market sees we are right here at the point of control. Why buy puts when you are right at where you bought the underlying, really? And that's really what this market is telling us. This is where most people have bought these stocks and things of that nature. So when you're at those levels, you're probably not looking to protect your profits in a sense, because you don't have any profits. You don't have any profits. You don't have any losses. So there's it's very difficult to manage that type of trade, right? So people aren't necessarily buying puts. That's why we're seeing the market come off and not really see volatility expanding right now, I believe. All right, so this is the breakdown of the E-mini S&Ps. You can see they're trying to cover this gap. On this chart, you can see that it has not covered the gap. Very close, maybe a couple of ticks away to tick off in order to hit that, but it looks like that's what the market's trying to do right now. All right, on to a couple of things that I've done. Morgan Stanley, I had an opportunity to get out of this. I was scrambling to try and get out earlier this morning for about 8 cents. And Morgan Stanley, with this trade, I had gone in there and sold the December 40 puts in there for 33 cents. Now, I was trying to squeeze for a little bit better than 50% of my max profit because yesterday we had that nice big move. Tried to get out for about 8 cents. I think it's trading around 12 right now, so I'm a little bit of ways away. I'm not too concerned about these necessarily. I'm going to work it out, let it work out for a little bit longer. We're getting volatility to come out, and that should help theta decay and things of that nature, because it's in the D's. This theta decay is really going to start ramping up heading into these last 15 days. So if you watch my daily market commentaries, I show that curve where we start to see theta really picking up, and this is right in that wheelhouse where it really starts getting steep. So I'm going to kind of squeeze this out for a couple extra pennies. If anything crazy happens, I'll pull the ripcord on it. But at this point, I think I'm going to hold on to that for just a little bit longer. Do you want the penny or do you want the trade? Right now, I just want the penny. All right, so that's what I'm working with on Morgan Stanley, but I would like to get out of some more of those long deltas because I think the market's going to come back around. All right, Netflix. It's stuck, you know, in a bearish trend here, as with the broader markets. The FANG stocks have not been doing very well. But again, I believe the markets are kind of making all these moves and are going to end back at their point of controls, at least in the next week or so, and kind of settle down there. We'll see some volatility come out. That's my thesis on this market. So with Netflix, I decided to go in and throw in a strangle. It's a little bit wider strangle than I normally talk about with my strangles, the rules in and around that. I went just a little bit further out because Netflix is a high dollar stock, has high implied volatility. All of those aspects allowed me to get a little bit further away, and I was able to collect a nice, decent credit for it. So I went into the January and sold the 230 puts, and then sold the 360 calls to create that strangle, and I got a collection of $3.96 for it. So hopefully we can come back in and around this area towards the point of control, settle down, and that will be good for me, obviously. And if you can look at this chart here, the 230 puts would put me just below this Fibonacci level here, which is nice. I got 2 Fibonacci levels. One is going to be a very strong support level. That's where it lines up with the value area low. And then to the upside, I've got the 260s. So that's up here. But when you add in that credit, it puts me, 264, 265. So close to the value area, the point of control, to the Fibonacci to the top. I'm keep looking up here at this point of control, but it's really closer to this Fibonacci right here where we get 368. So I'm 365-ish, 364 is my break even to the upside. So it's very close to that. Should start seeing some resistance. So I've got 2 levels of support and 2 levels of resistance in and around this strangle. I think that I'm pretty comfortable with that one. Despite, if we started really seeing some bearishness in this, I might pull the ripcord on it. But as of right now, I'm bullish and slightly bullish in Netflix, enough to get me back up to the point of control. Yes, we do have this cross here, which makes it a bearish trend, but I think that we're going to kind of pop back up here again to the point of control and settle down. And that's all I've done today. I am trying to get out, like I said, that Morgan Stanley, but that's about it. Thursday's webinar is going to be on the long put diagonal. I'm going to show you how to set that up, especially if we stay in this bearish trend. That's going to be some good opportunity for us to put on a few trades. So check it out at protraderstrategies.com. That's about it. If you can't take that, take it easy.